It gets like louder. All right, welcome. This is a big crew. I actually wasn't expecting this many people. So I've got Jonathan Griffiths here. Has anyone worked with Jonathan in the past? I've personally used him for my own transactions, and we refer a lot of people here. So if you've never met Jonathan, we give out his name quite a bit. It's nice to see him in person. You're in Durham, North York.
Yes, we
everywhere.
got one at Don Mills and Eglinton. We've got one at Fort Union in 401. And we've got one at Brock Street in Whitby and 401.
And your son's now in it with you too.
Yeah.
So
Yeah, we have a
generation.
couple of other lawyers as well.
Yeah.
So
And you've got a really cool daughter as well, who runs a really awesome company.
Oh, we'll save
We'll save that for later.
Yeah.
Yeah, so we follow your daughter too.
What?
Is it mainly residential? Okay.
Yeah, we do a bit of commercial, but really our big focus is residential real estate. Yeah, that's what I like.
Bread and
to do.
butter.
Yeah.
And
Bread and butter.
The normal stuff and mortgages. Yeah.
Yeah.
Just humans, like
Just
know?
regular people.
normal people. Yeah.
Yeah. So we've got a big mix of agents in the room, both experienced and we've got some brand new. So this should be a good session. We're gonna be talking a lot about like a lot of the new things coming in that you guys should all be aware of. Claire talked a lot about this stuff at the meetings, but it's nice to also have a lawyer here. So I guess you'll kind of start off with some topics, and then if you guys have questions about, I think anything, Jonathan's really good at answering it. So any topic that you guys have been curious about, don't hesitate to ask him, especially while you have him. Jonathan's very open. He's very quick to answer stuff, even when he leaves. So that's one thing I like about him. He's just always available for us. So we're gonna let him take the floor. And then if you've got questions, just shoot it at them. I'm gonna watch the Zoom and Facebook pages. So if you guys are watching virtual and you've got questions, put it out there and I'll shoot them out to Jonathan. So I'll let you
Great.
take the spot.
Well, thanks for having me. Thanks for coming. So I'll give you a little. So the most important thing I'm going to tell you today is my cell phone number. So I'll give it to you. It's 416-917. Yeah.
Sorry, was that? I have every number that you have, but it's not that number.
No, this. You won't find it written anywhere. It's 416. And it's 917-1000. So 416-917-1000, and you can call me and you can text me. I started life when I was a kid. I guess I was 19 as a real estate agent. So I kind of feel for you guys, because I remember you'd have problems like on weekends and late at night, you could never get a lawyer. So my kind of goal at the moment is to try and make your lives easier. So if you've sold a house twice by mistake and it's Saturday night, well, you sign back two and see which one, right? So if you've sold your house, the house twice, or you've got some crazy clause that you don't understand because some idiot lawyer wrote it up, and it's so you can always call me or text me, and I'll try and clarify things for you. So I'd rather that you call me or text me than that you have sleepless nights. Because I know sometimes something will really bother you, and you're welcome to call me or text me. So that's the most important thing. The 416-917-1000. We just a while ago, like it's quite a long time ago, but basically decided that our thrust was going to be residential real estate. So that's our big thing. We do a lot of residential real estate and mortgages. I found that if we did something if we did complicated work, then I wasn't available, or I'd get stuck in meetings for a long time, and that really didn't work with the residential. So you kind of do one or the other. So for the accessibility and quick turnaround, we do the residential real estate. So if you have problems or questions, we can help you with things. You know, stuff like easements, or you get something funky on a transaction. We're always happy to help you out and help you out with questions. One of the things I think that's going to come up soon, not to be a dooms guy, but you're gonna have people coming to you wanting to list, and you smell it. They might be in some financial trouble. And we can also do a bit of digging for you on that, because they're not always totally forthright with you. You know, you'll ask them what's against the house or what problems you've got, and we're trying to close one in a couple of days. They're almost $200,000 in the hole. And we're going to see that more and more, where people have to sell. Even they bought a year ago, property's gone down 20%. They put down 20%. So that's a phase that maybe we can help you with a bit. If you smell a rat that the client's not going to have enough money to close, and you can then work ahead on it. So there's an exceptional amount of new legislation at the moment. Most of it's kind of bad news. So, but there's one little bit of good news. So I'll just go through basically in order of what I think the most important things are. So really what you've seen is we have a serious housing problem. We've got a shortage. We've got a lot of immigration happening. And really, instead of dealing with the shortage, the politicians they've done some sideshows like not letting foreigners buy, anti-flipping, those sorts of things. So that's why we've got a rash of these new rules. So the first one is the anti-flipping rules. Okay, so the basis of the anti-flipping rule is that if you sell a property within a year of closing, so let's say you bought the house 1st of June last year, and you close it the 28th of May this year, it's less than a year, and any profit is full taxed. So that it doesn't matter if it's your principal residence, you're still going to pay full tax unless you've got a reason why you sold it. And it's not the usual reason like, oh, I moved in and I miss my mom and her cooking, and my cat doesn't like the balcony, so I'm selling. It's stuff that's third party verifiable. So one way to get around paying the taxes, you could die. So if you die, you're okay. You could what? Yeah, you could resell within a year if you died. So that one's okay. You can split up, but you got to remember you got to split up separate at least 90 days before the closing. I had some people in my office counting because they split up on the 12th of November and they were closing the 15th of February. So they were okay because it was more than 90 days. So plan your splits early and don't sell too quick, right? You got to be a bit careful for that because you could end up paying a lot more. Then you could be insolvent. That works. You could move 40 kilometers closer to a new job or new educational, and that works. And if you've got a really bad illness, that works too. And then another one is if you get fired. So you can't quit, you got to get fired. So if you get fired, then that's another reason why you can sell within that time period. So So if it's an investment property and you sell it within that time period, you're gonna pay full tax, not capital gains tax. Right, so in effect, it's not just principal residences. And oh, by the way, if you lose money on your principal residence and you sell it early, they won't give you a tax deduction, right?
Partners in profit.
Yeah, just profits, because usually if they're gonna tax a gain, they'll allow you on the loss, but they won't on this one. So one of the other things that's happened with this anti-flipping is we're gonna see a lot of assignments happening. So they've tightened up the rules on assignments. So if you're trying to flip a condo or a new home before closing, they've done two things. One is that you're going to have to pay HST on the profit. Okay. So if I bought a condo for 500,000, signed it in, let's say 2015, now it's coming up for closing and I'm trying to flip it and I flip it for $1 million, right? So then you've got a $500,000 profit. You're going to have to pay 13% tax on that profit. And then, so let's say that's 500,000, you take off the 65,000, you got 435 left. You add that to your income, so you pay tax on that money. So the people, we got some people doing deals that are absolutely just like that at the moment, and they're not happy for some reason. And the other thing is, the government says that if you're flipping, the HST has to be remitted by the end of the next month, and nobody knows that. Like, everybody thinks they just file a tax return, but if you're flipping and you make that profit, you have to cough up to the government real quick. So that one you've got to watch out for, just with your timing on the closings. Now, the fact that you keep the place for a year doesn't mean that it's automatically got as a principal residence. It doesn't mean it's automatically not going to be taxed. It's what the government's doing now is, when you sell your principal residence, you have to file a return, right? So they're now counting how many of these returns, and there's a case in BC where somebody bought and resold 3 times in 5 years, and they got taxed full tax on all of the profits. And they look partly on the people that are buying, and in that instance, it was your worst nightmare. It was a real estate agent married to a contractor. And so so you have to watch out a bit for that. So that's probably number one. Number two, there's a new rule, which is, it's called the Bear Trustee rule. So a Bear Trustee, it's not somebody that runs around with no clothes on. It's somebody whose name is on title, who actually doesn't own the property. So think about it. Some financial planner tells you that you should go on title with your mom as joint tenant, because then when mom dies, you can get the money really quickly, because you don't have to go through probate. So under those instances, you're now going to have to file every year within 3 months after the end of the year, saying, hey, that property I'm on title with mom, it's not really mine, it's mom's. So this is something nobody's going to know about. And the accounts are all going to say, we didn't know that you were on title with mom. So this one's a potential problem. And theoretically, even if you only go on for 1%, like people do to help the kids get a mortgage or help the parents get a mortgage, there's no exemption for that at this stage. Hopefully there will be, but theoretically you have to file the return. I don't think they've made the return up yet. They'll probably do it sometime later in the year, but that's a biggie. And you might be on title because your kid's splitting up with his spouse and doesn't want to go on title, so you go on title as trustee. You're going to have to file this. You're going to have to file this return. So flipping on now to some good news. There's a new there's a new account, and it's got a real simple name. It's called the tax-free first home savings account. So this is new. It's going to come in 1st of April. You guys may know about it already. It's going to come in 1st of April, and it's for people saving for a home. And you have to be a first-time buyer, but first-time buyer can be somebody that owned a home, lost it or sold it, and then hasn't had another home that they lived in with their spouse for the past 5 years.
It can be.
It can be, yes. So you can go back in afterwards. Let's say you lost your shirt in the 90s and now you're trying to rebuild to buy a home. You can use this plan. So the plan is going to start April the 1st. You have to be over 18 to open an account. The nice thing about this plan is you get a tax deduction like you do with an RRSP. Okay, so you put the money in, you get a tax refund. You can put in up to $8,000 a year, and you can carry forward 1 year. So let's say this year's a bad year, and you can only put 2,000 in. Next year's a fantastic year, as you all know, it's going to be a fantastic year. So you've got extra money so that you can then put in 14,000. So that between the 2 years you put, but you can only carry forward for 1 year. And when you any money that accumulates in there is going to be tax-free. And then when you pull it out, it's tax-free. And it's not like an RRSP where you have to pay the money back, right? So with an RRSP, as you know, you can pull out up to 35,000, but you have to pay the money back. So you avoid that. So that's kind of good news. Yeah. Nice to see you.
Jonathan taught me when I went to a broker's course 100 years ago.
100 years, yeah, the real property law, right? And I knew your dad too. Yeah.
So the question, can you do both? Can you do the H?
Yes, you can.
Because I read somewhere he wasn't sure whether.
To begin with on that, they were saying that it was either or, but the latest seems to be that it's both.
That's correct.
But there definitely, yeah, there definitely was this that you could only do one or the other. So in theory with this, you could get 40 out of your RSP. Sorry, 40 out of this and 35 out of the RSP. So, and then if you don't use the money, you have to use it within 14 and something years. If you don't use it, you can flip it over to an RRSP. So so if you're putting money somewhere, it's probably a really good place to put it, because if you and the other thing is you have to buy the house by the time you reach age 70. Yeah. 70. So people, first time buyers are going to have to rush to buy before they're 70. Yeah. So that's I mean, I always, when I tell people about stuff, I always think, is this something that gives you a reason to get in touch with your clients, right? So rather than sending them something saying the biggest compliment you can give me is a referral, this time you're actually giving them something of value that helps them, or that might generate a phone call. And maybe the Bear Trustee thing would do that, but this probably is it's a good segue to getting in touch with your clients. So that was the one piece of good news. Now we're back to bad news. So there's a foreign buyer ban. This was an election promise which wasn't very well thought out. So the basis of that is that if somebody is not a citizen or permanent resident or certain refugees, if they buy a home and you're part of the process, there's a $10,000 fine for the buyer. There's a $10,000 fine for you guys. It's a $10,000 fine for me. And don't forget the mortgage guy. He's on. Claire, no. Claire, it's Claire, no. Claire will tell you what. Claire will give you clauses to put in so that you guys will all be covered, right? Yeah. So it's a $10,000 fine, and it's odd because the deal is still valid. So I had somebody, not at this company, but another one, where they put in a $65,000 deposit. This was right at the beginning of the year, and it was a foreigner. So they did not get that. They defaulted on the deal, and they did not get the $65,000 back. But it doesn't mean that the deal is invalid. It's still enforceable. So the seller can still enforce it. And if the buyer makes money, then the government, or if it's a profitable transaction, the government can then force the buyer to resell the property, this foreigner, resell the property, and you'll all be very happy to know that the money goes into affordable housing. So the profit goes into affordable housing.
That's the government pocket.
No, affordable housing, the poor people. Yeah. So it goes into affordable housing. So that's the happy ending to that one. But we all have to be careful. There's going to be some wording for that. Essentially, that we'll start to see it in Schedule A's, where you've got the buyer signing that he's not a foreigner. So it's a 2-year. And it applies to properties that are 3 units or less. So if you want to sell a foreigner an apartment building, it's fine. It's just if it's 3 units or less. If it's not year-round property, it's exempted. If it's not in an urban center, it's exempted. And there are certain exemptions for people with work permits. Essentially, they have to have filed a tax return here for the last 4 years. People who are students can buy up to $500,000, but again, they have to have filed tax returns for the last 4 years. So if you see any kind of a foreigner and they're not a citizen, you've got red flags. If they're a citizen, it's fine. Doesn't matter. They can have lived in Hong Kong for 40 years. It doesn't matter. If they're citizens, they're home dry. So we've got the ban, and that's Mr. Trudeau's ban, and then we come to Mr. Ford. So Mr. Ford, as you know, has this non-resident speculation tax act. So that's the one Mrs. Wynne put in 2017. You remember it was 15% tax on foreigners buying properties. It's now, and that used to be just restricted to the Greater Golden Horseshoe. It was a very big horse because it started in Niagara and it went to Simcoe and it came down, but still it was restricted. Now it's province-wide. So province-wide, 25% tax does not apply. It does not apply to citizens. It does not apply to people with permanent residence cards. And certain students and people with work permits, they pay the tax, and if they become permanent residents within 4 years, they've got 90 days to claim it back. But if the government doesn't send them their card within the 90 days and they don't do it, they lose it, right? So it's a little bit harsh, because as you know from the passports, they're not always perfect. They could be a little slow. So that one you have to be careful about. That's a 25% tax. That applies to properties up to 6 units. So if you can sell somebody something with 7 units, it's not going to apply. Anything commercial, it won't apply. If it's a split between residential and commercial, they'll split it based on the proportions. The other interesting thing you have to watch out for with that is that if, let's say you get a buyer, they go in firm, and they can't quite qualify for the mortgage. So the bank says, you need a guarantor, or you need somebody else to go on title with you, essentially. We've had instances where the parents want to support, go on title, and they're in Turkey or somewhere else. You would think logically that if they go on for 1%, you only pay the 25% tax on 1%. You don't. You pay it on the full amount. So that's a bit worrying. Two more quick things to talk about, and you're welcome to ask me any questions you like. The federal government has what they call an underused housing tax. So this is Mr. Trudeau, and it's all across the country, the underused housing tax. And then in Toronto and in Ottawa, they have a vacancy tax. So you've got the two. So the one will only apply if you're a foreigner. The Toronto and Ottawa one applies to everybody. And essentially, as you know, you have to file. It used to be, was supposed to be the 2nd of February. They've extended that now. But if you own a property in Toronto, you have to file every year, right? So you've got to file every year. There's a penalty for filing late, and if you don't qualify, it's 1% of the assessed value every year, plus penalties. And with that one, basically, if it's your principal residence, you don't have to pay. So even if you spend 10 months a year in Naples, Florida, and you spend 2 in the, so long as you say it's your principal residence, it's not a worry. So that's a big help. One thing you've got to be careful about is if you say it's rented out, you have to have written leases. So they're asking for written leases, and those leases have to be for at least 30 days. So you need written leases of at least 30 days. And if you add them all up, they've got to be at least 180 days rented out. So oral leases won't work, and Airbnb's not gonna cut it because you don't have written leases for at least that time period. And then the other thing, of course, is because it's a tax, if the guy that you bought from forgot to file or filed falsely, the new buyer is on the hook, right? So it's not a personal thing where the person that didn't fill it out properly or didn't fill it out at all is on the hook. It's actually the buyer's on the hook. So we're going to see some clauses on that. So when you close, you're going to want to have, well, the lawyer's going to do it, but you're going to want to have proof that they filed, and also an affidavit saying that they told the truth when they filed, and then an undertaking saying, oh, by the way, if I didn't tell the truth when I filed, I forgot something, then that they'll then pay. So it's an undertaking to indemnify. And if you mess up on all of that, the title insurance companies will cover it. So practically speaking, it shouldn't be as much of a nightmare as it looks like. Yes, sir.
So we should start putting that clause in?
Yeah. So there's 2 clauses we're probably going to start to see, and I think OREA has them both now. The one saying that you're not one of these nasty foreigner guys, and then the other one that you filed the vacancy tax certificate. Yeah, so I think we'll start to see those 2 things. So that's all the miserable stuff I can tell you. I could think up some other bad stuff if you want, but and any questions, or and you can ask me about anything.
Foreign ownership is problems are
Yes, they are for Mr. Trudeau, but they're not for Mr. Ford. So Mr. Trudeau says if you don't have access year round, or it's not a year round usable property, that you can buy it. You're not banned. But Mr. Ford may say it's residential property, so you do have to pay.
Thinking of luxury cottages.
Yeah, well, I think both of them would, they don't want to let rich guys off the hook. So I think you'd have to, you'd be stuck on both of those. I mean, all of this is really complicated, and a lot of the rules, they haven't really developed yet.
I think it's access, like access issues.
Well, Mr. Trudeau, if you tell him, look, I can't get here year round because it's on an island, and you know, I'd fall through the ice if I tried to come, you know, in March. He'll say that's okay, right? But Mr. Ford, no. Yeah, he'll say you could get a helicopter, so you got to pay, right? So it's all very complicated. So you just need to call Claire and he'll tell you, or call me. But this is stuff that you can't expect that you're going to understand at the first go round. I have this little book and I have it all written out. So, and that's usually I remember everything, but this is just a lot at once. So because there are some exceptions that you want to look at. Yes.
And again, with the Bear Trust.
Yes.
Rental ownership to help.
Yes.
The implications there only arise through the flipping. Or
No, that's generalized. Yes. So that the Bear Trustee rule is it's a new bonus problem that is in addition to the flipping, anti-flipping.
So a son, a daughter, a child, whatever.
Yeah.
Buy something, live in a property with mom and dad's help on title.
Yeah.
But it's their principal residence.
Yeah.
And not completely established, then those complications go away.
And it probably makes it clearer because you can say I filed this return for the last 10 years, right? It's when you didn't file the return and then you're saying, no, this is mom's house, right? This is, so mom, the house sells, right? And then it's gone up $1 million and you're on for 50-50. And you tell the guys at CRA, no, this is mom's principal residence. You don't get any money here. They're going to say, oh, can we please see a copy of your trust filings? And if you haven't filed, then you're in trouble. Right? Yes.
So what if somebody, say, buys property next door to them, their kid on title, so they don't merge the property?
That's a trust, probably. Yeah.
That's filed the whole time.
So you just got to file. So it's not that it's specifically a problem in and of itself. The problem is remembering to file.
They haven't filed it correctly.
No, this is new. Yeah, so this is kicking in just this year. So as far as I know, they haven't even done the forms yet. So you're going to have to file by, what's that, the end of March 2024, you'll have to file. But it's a new rule that we didn't have before. So it's really the government trying to make sure that people are not making money and by pretending it's a principal residence, and then they resell it and they put the money in their pockets. So in the last few budgets, they've been saying, oh, we're gonna put another 200 million into tax collectors enforcing compliance because people weren't paying. And when people were flipping condos, they weren't paying. But what I understand now is that CRA will go into a developer and they'll ask for all their agreements and all of the all of the amendments and stuff, and then after a year they'll go do a title search and see which names aren't the same and then start going after people. But they are actually going after people. It's It's not like shut your eyes and you'll get off with it. You're probably gonna get nailed. And the important thing I always tell people is change your driver's license. So if you say that you're moved into somewhere and you don't change your driver's license, that's kind of a threshold thing that makes the bells go off. And sometimes people won't do it, like, because, you know, at mom's house, the insurance rate's better than where they're moving, so they leave it at mom's house. And then they get CRA on the door and they wish they'd done it. So you just,
Criminal alert.
it's fraud on the insurance company, probably.
Someone on Facebook was asking, this is about, I think, the vacant home tax.
Yeah.
How long between the tenants before it's considered vacant?
So the rationale is that you've got to have it rented out for 180 days in the year by written lease.
Okay.
Right? So that's really what that's how they figure that out. And I mean, there are some exceptions, like somebody goes into long-term care, that it's they can be there for 2 years and you're not hit with vacancy tax. You could also die during the year. That's another way of getting around the vacancy tax. Yeah. If all else fails, just die. It's just seems to work. It works everywhere. Yeah.
Just all the problems.
Yeah. Yes, sir.
Can you still rent it out during the 2 years?
Yeah, I guess you can. Yeah, nothing to stop you. So the 2-year period then is really going to be if it's empty. Because if you've rented it out and they've got various rules, like you have to have a written lease. That's pretty clear that you got to have a written lease. But if you rent it out with a written lease, yeah, then you're within another exception, right? That you've actually rented it out, so it's not vacant. Yes, sir. Do I help them? Well, we have a subcontractor for that. Yeah. Yes.
One of our agents that's here but is very shy to ask you the question, asked me to ask it for you. So I'll
Okay.
do that. He wanted to know why on a deed, when you get a mortgage through a bank or
Yeah.
a lender, et cetera, the purchase price is actually registered on the deed
Oh, okay.
versus when you do a private mortgage, it's only the amount that's being lent.
Okay, so I think what we're looking at there's two things. One is now when you go to borrow from a bank, often they don't put the amount you're actually borrowing on the mortgage. Some of them will put the full purchase price, and the TD, for instance, puts up to 125% of the purchase price. And some people are under the delusion that banks like you to pay them back. It's not true. So they do that so that they've got the security, so you don't have to go to a lawyer again. Like if you're within their guidelines and they want to lend you up to that, let's say 10 years from now, they want to lend you up to that 125%, they then don't have to put you through the lawyer process. You just go see your friendly banker and they sign stuff. So that's why they do that.
Private lender do that as well, or?
Private lender, sometimes they do it, and sometimes they'll jack it up because they want to make sure they're covered for their ridiculous fees when they, you know.
Just to add to that too, would it not, if they're gonna have the full price as a charge or as a lien, would that not be a line of credit rather than a mortgage? They max it out for where you want to borrow?
Well, after this, he'll come in and tell me. And then I'll pose that question.
Okay, no, again, like, no, if you get a line of credit rather than a mortgage, they're gonna give you a line of credit for the value of the house, and then you can take what you want.
Right, so long as you,
Those don't get up that max. Right?
yeah, so they'll,
So I just wonder if that might be the difference.
they like it's. So I've seen their thinking behind it, and they put it under customer retention. So they tell the client, hey, you're gonna save legal fees because you come back to us and you can increase without going through a lawyer. Perfectly true. But the other thing they like to do is to put a large amount so it blocks borrowing from anybody else. So if you've got one of these deals where you've signed, you know, you're borrowing 800,000 and they've registered for 1,250,000, you get into trouble. You've got equity there, and you go to a second level private lender or even another bank and say, you know, I've got 300,000 equity here. Can I please have 100? That you can't do it because the bank's got priority. So they call it customer retention, but really they're kind of taking you as a prisoner so that you can't go anywhere else.
I think I take the task, whoever it is, I take the task. If I borrow 800, I want 800,000 on my
Yeah,
lien. I don't want to see million or million two,
and they do it constantly without telling clients.
right? So yeah, that's why the lawyers involved. Just don't go yourself, right?
Yeah, and then they'll give you the mortgage at the last minute and they'll tell you that you can't change it. But it's deliberate on the part of the banks. So that you can't go anywhere else. Yes, sir.
Can you explain the assignment profit again? So there's a
So
tax implication for all of that money plus an HST.
so the HST, and this wasn't clear until now, but it is clear. So what you do is let's say that I'm the lucky guy that bought off the plans in 2015, right? And I paid 500,000 and now it's worth $1 million, right? So, or probably if I'm selling to you, it's worth $1.1 million, but you're giving me $1 million, right? So you're giving me $1 million. So I have a $500,000 profit. So I have to pay HST on that 500,000 profit. The theory being that this is the price of a new home, so the government should have 13% of it. So I have to pay that, and then that's a deduction off my profit. So I then have 435,000 left, and then I add that to my 50,000 a year I make as a lawyer. And then I've made like 485,000. I have to pay taxes if I made 485,000. So as opposed to saying there's $435,000 profit, it's a capital gain. So I only have to add half of that into my income, 217.5 or whatever it is. So it's a real hit. I mean, we've got clients now coming in and they're really upset because a lot of them had already mentally spent the money. Some people do that, you know, they do it with inheritances. So that's the worst. This thing.
Realtors never do that.
No, realtors don't. No, realtors don't look at a 50,000 commission and say, that's a cruise. That's a cruise, right? They always think, no, we got to take this off and that off, and you know that, but not everybody does that.
So the best bet is to close the deal, rent it out, hold it.
Right. So just going through this process. Okay. So if you close the deal, right, and you rent it out, right? So when you close the deal, because you're not moving in, you have to pay the HST rebate back to the builder. And the rebate's typically about 24,000. So you get a tenant. Once the tenant's in there, you can fill in a nice big long form, and then they'll send you the money back. It creates employment in Prince Edward Island. So, because you know, can't pick potatoes all year. So it's yeah.
A lot of information.
So then your tenant moves in, right? And then you have to keep the property for 1 year after the registration. So you might have had an interim occupancy for 20 months where they're bleeding you to death. The CRA says they don't know about that. So they make you keep the property for 1 year after you've actually got the deed and registered the property. And then after that, when you sell it, then it's a capital gain. Because you kept it for a year or more than a year, so it's capital gains tax. So you'll save a lot of money doing it that way, because you won't have to pay the 13% on the flip of the profit, right? And then you'll pay capital gains tax as opposed to if you keep it for a year, you pay capital gains, not full income tax. So yes, so at the moment, we're trying to talk people into closing and keeping it for a year, and then it's
After it registers, not the occupancy period.
yes, it's after it's registered.
So that could be
And-
another 6 months to a year after occupancy.
It's a year. Yeah, it could be. Yeah, so you could end up keeping the place like 3 years. Yeah.
So to get that rebate, does the value of the condo have to be a certain amount? Can I go through it up?
Yeah, I mean, that's kind of complex, and so essentially, so long as the condo is 450 or more, that when you buy it, like on the purchase, you'll be fine.
Okay,
If it's less than that, you will not necessarily get all of your HST back. But that's a complicated
I thought it was capped at a certain amount. You couldn't go.
24,000.
Oh, no, I know
Yeah.
the value of the condo. I thought it had to be, it was capped at a certain amount.
Oh, that's for the GST part of the rebate, but no, it's not generally capped. Yeah. But again, it's complicated. Yeah, it's and when you run into this stuff, you're always welcome to ask us questions. So I think we're gonna see more and more assignments and they're complicated to deal with. I should tell you a little bit about us. We have, and I don't know why she does it, but partying, I guess some of you dealt with there's a lawyer who works with us, and that's what she likes doing, right? is reading status certificates and new home stuff, and she sends you these big long memos about everything on this. So and she also does the assignments. So she's sort of got a process for doing it, but yeah, she's about the only one that has that process. So
People not making any money on the assignment. It's only when you make. money.
it's only when you make money you pay tax.
And if you
Yeah,
make a distress order,
yeah, if you lose money, you don't pay tax. Yeah,
You
Yeah.
don't get it back.
no.
When you're done.
You die.
yeah, you could die.
That's which is something.
Yeah, yeah.
Someone from Facebook asked, can a student with no income sell a property before 1 year and save the taxes?
So the student with no income will now all of a sudden have income, right? But if you're somebody that doesn't otherwise make income, you're gonna pay a lot less tax than one of you who makes like $500,000 already, right? You're gonna pay 53.5% tax on the profit. So yeah, somebody with a low, so it does depend on your tax bracket.
What are your normal sleep hours, so we know?
Well, I usually, I always wake up in the middle of the night, so. Yeah. Yeah.
And then you declare the income tax.
Yeah.
And then you decided to sell the property.
Yeah,
Is that still going to count as your residential property?
they've got funky rules on that, and they don't make any sense. And sometimes the tax department does things that if you read the legislation, it doesn't make any sense. But at the moment, what the tax department does, and you should ask your accountant, is so long as you're using more than 50% of the property as your principal residence, they don't charge you capital gains tax.
Is that accounts in the condo as well? Let's say you're going away for it, or as you mentioned, and then you're living in it for 6 months and renting it for another 6 months. So it's still when you want to sell it and you take.
Yeah.
Income tax.
Yeah, they're probably still going to take that as your principal residence. Again, they've got rules, but the rules are basically, they seem to be, if it's predominantly used for personal use, they don't seem to charge. capital gains tax. But there's nothing, if you read the tax act, you're not gonna find it there. It's just departmental voodoo, this is what they do. But they could theoretically charge. Yeah,
If the property is,
sorry,
if the property is, let's say, majority of that, like the first floor and second floor has been rented, and the owner lives in the basement, how that applies?
well, theoretically, if the owner does not use half of the property, then it's gonna be subject to capital gains tax, but on a proportional basis. So if it's, let's say it's three units and they're equal size, then 1/3 is principal residence and the other 2/3 would be subject to capital gains tax.
I think what he's meaning is, it's a two-story home in the basement.
Yeah.
The owner's living in the basement, the
It's
upper
not a
level is
multi-level, it's a
one unit that's being rented.
Right, so you're still, if you're using the basement, presumably it's 1/3 of the lot, sorry, of the floor plate. Yeah, yeah. But if it's a bungalow and you rent out the basement and you keep a laundry room down there or a storage room so that you're more than 50% usage for yourself, then I think you're okay. But all of this stuff, you need to ask an accountant who knows what he's talking about, right? This is, yeah.
Is this the same thing which is applicable towards Airbnbs?
Oh, I suppose with Airbnb, yeah, but you see, Airbnb is a commercial use. That's the way they look at it.
No, you're living there.
You're living there and you're rent. So you'd have to pay tax on the income, but when you go to sell it, that one's difficult. And I'll tell you why it's difficult. It's because when you have a commercial use, then what they tend to do is charge HST on the portion that's being used for commercial use.
If you say commercial, means you're renting it out.
You're using it as a business.
Right.
I mean, another example of that we come across all the time is somebody who's selling a farm. Right, so it's 100 acres and it's got a house on it. So what the government says is the house and like 1.25 acres is principal residence, so you don't pay tax on it. But the other 98 point whatever, you have to pay, that is subject to HST. So they'll find something and then they'll allocate it out. So think about on the Danforth, you've got a store with an apartment above, right? So they'll say the store portion's subject to HST, but the apartment isn't because it's used residential. So they have all these funky rules, which is why you always have to be careful when you're filling in a deal and it says that the HST is included in the purchase price and it's a farm. But we do see agents doing that, and then the buyer comes along and insists that the seller pays the HST.
Well, if the seller agreed to pay the HST in the contract they signed with the buyer, are they not obligated to pay that?
Well, except they didn't know.
Oh, they didn't read that.
The agent just filled it
I
in.
think the agent's gonna pay the HST.
Yeah,
No.
I think it's time to find. a new
yeah, I
job.
did.
The agent will pay the HST through being sued, not telling the seller.
Yes,
The listing agent.
yeah, yeah. We had one recently where it happened. So I phoned the client up and tell them, oh, you're gonna have to pay this, blah, 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 blah. And they said, the agent isn't being very cooperative. She's just not being,
Not taking my calls.
yeah. So the guy starts to laugh, right? Says, oh, the agent's my daughter. So it was a part-time agent, he's then telling me how busy his daughter is and what she's doing this and that and the other thing, but so he ended up paying the HST for the buyer. We fought about it but eventually paid
He
a
was
bunch
the
of money.
seller then.
He was the seller, yeah,
So you
yeah.
got a listing. The 2 floors, these principal residence, the
Yeah.
basement is an Airbnb.
Yeah.
So HST is not included in the floor.
Well, you got a problem there because, and we had that as well. We had one in Prince Edward County where like it was an agent selling their own place with Airbnb, and they sold it with the HST included in. And because it's a commercial use, you have to pay the HST on top. So that the seller ended up, the agent seller ended up doing that. And I had another one in Collingwood, you know, Blue Mountain or whatever, where it's in a rental pool. I had an agent lose $85,000 because she filled that in as included in and it wasn't.
So
So,
you hope
so
the sellers will actually let you know that that open portion is not a lease agreement, it's actually Airbnb.
yeah, you probably have to ask the question because you probably know if there's a screw up, it's never the client, it's either you or me, right? Yeah, me, yeah. So that's why whenever you get something questionable, you try and move the monkey to the accountant or the lawyer.
Okay.
So you try and move it to the lawyer, and the lawyer's trying to get the accountant to look after it.
This is
So
only for
That's a big one.
selling the.
selling,
Correct.
yes.
What about the business downstairs? You know how they have these small businesses, a cake business or jewelry business in the basements?
So again, it's voodoo, right? It's voodoo. But the way the HS or the way the tax department looks at it is, so long as you don't claim input credits for work that's done down there, like, you know, putting up walls and carpet and stuff, that they don't charge it. But if you ask for input credits, so it's silly, right? But that's how they look at it, which is why, you know, when you get something that's unusual, you best ask an accountant.
Yeah, no, I'm just looking as a listing agent, I go to somebody's house, they have a small little business in
Yeah.
the basement, that's commercial now. Right, so, and I normally put the HSD included.
Yeah, so it could potentially be a problem. Yeah. So that's why you always tell them to talk to their accountant. And if you possibly can remember to do it, you put it in an email. Because otherwise, when it goes south, it's, no, you didn't tell me that, right? It's you. Unfortunately, you have to protect yourself, right?
Just want to clarify, so if you have rentals.
Yeah,
Expense. Expenses.
yeah,
For construction, maintenance, whatever. Have to declare that income
yeah.
and HS, like, is that now?
So this is used residential, right?
Yes,
So used residential is never subject to HST.
Right.
Right?
but so they don't deem it like during the business.
No, the business of renting out, no. So even you own an apartment building and you sell it, it's not subject to HST. So you wouldn't have that
But
problem.
Airbnb it does.
Yeah, because Airbnb is a business and it's subject to HST. So if the person comes along and who buys your Airbnb and they have an HST number, what happens is it's called self-assessing. So the buyer comes along and says, this is what you got in addition to on the agreement. Buyer comes along and says, okay, guys, here is my HST number. Here's my undertaking that I'm going to look after the HST. And then that way, nobody actually ends up paying any money. It's just filing forms. But that's, so if it's a farmer coming along and buying this land, they wouldn't have to pay HST because they'd have an HST number. But if you write that it's included in, they'll take the money off, right? On closing, and then they won't pay it. So it's like a profit. It's do you think the pizzas come?
Oh, it's here.
Oh, sorry. Okay.
Don't
Wow.
apologize.
No, you're good.
So yeah, if you guys are hungry, I'm just,
I've got just to clarify just a couple things there. Someone's gonna ask you, it's very actually about the Airbnb. So if you're renting out an Airbnb in your principal residence in Toronto, right?
Yeah.
Does that change your principal residence status? And you're saying HST on the commercial portion for the Airbnb, but does that affect the capital for the principal residence?
So long as you're not using it predominantly for commercial.
All right, so that's fine. So you can see.
Yeah, and that's not written anywhere. Like,
No,
if-
so if someone's gonna ask me the question, I just
Yeah.
have the answer.
yeah, so that's just CRA.
So here's my real question. So on power sales. You
Yeah.
guys do power sales, and I think. all
Maybe
you
come
see-
here so people can hear you. Get in there.
Sorry, on power sales, Nelson and I came across this data, and the question is, used to be that person had the right to redeem. Right?
Yes.
And you still have the right to redeem, but now if the lender takes possession of the property, changes the locks, kicks out the tenant. Or the owner still has the right to redeem, but do they have the right to access the property, right to list the property on MLS?
Right, so,
It's a tough question.
let's sit down. So,
You can answer it later if you want.
no. So, and under, somebody doesn't pay their mortgage, right? Theoretically, they can be given 15 days notice. And then the mortgage company can give notice that they're going to sell the property. And during that time period, it's 35 or 40 days, depending on spousal status. Mortgage company sits there, they can't do anything. And sometimes, sometimes during the first 15 days, they'll issue a writ, like they'll issue a claim saying that they want possession of the property. Okay, so it's funny because you've got these two things happening at the same time. And in order to close properly, you've got to comply with both of these. So one is this notice under power of sale, but you can go through with a notice under power of sale and sell the property, but you don't have possession, right? So this power of sale thing doesn't give you possession. So at the same time, you have to sue. And when you sue for the money, like you owe us $1 million, and you also sue for possession of the property. So it's these two things, and hopefully this doesn't happen, but you guys may get lots of questions on this. So essentially, you've got the 15 days after they go into default, and then the notice happens. So let's say that's another 40 days. So you've got a couple of months where you've got access to the property, and your client can sell. And usually what you do is you keep in touch with the lenders. Because the one thing that drives the lenders crazy is silence, right? Because then nothing's happening and it's just getting worse. So often the lender will then, so what we always do is we tell the lender, yeah, they're in default. We put the property up for sale. Here's a copy of the listing. The listing, and it's always one of our agents. So they're like totally brilliant, competent agent, and it's fair market value. And this is just because they're afraid that they're gonna sell it to the brother-in-law and it won't close, right? Just to buy more time. So you send them the MLS listing, you do all of those things, and typically they will allow you time. But you have to be proactive, and you're better off to have a lawyer who's not too much of a dirtbag, right? Because they know some lawyers are reputable and some are less so. And then the lawyer just keeps in touch with the lender, and then you can shepherd it through to a sale. And typically, if it's an institutional lender, they'll let you get paid, right? Because and the argument we always make with that is, well, if you sell it power sale with somebody else, you're going to have to pay, right? So here it is. You don't have a lot of trouble. It's just getting sold and closed. So in the Mortgages Act, it says that if there is a sale by the lender, that the buyer can't come back in and redeem.
Yeah.
Okay. So there was all this controversy as to what did a sale mean? Did it mean it had to close, or did it mean it was an agreement? But at the moment, it's like a firm and binding agreement of purchase and sale. So once that's happened, then they're not going to let you redeem. They always put clauses in saying that if the buyer redeems, that the deal's off and the mortgage company doesn't have to close. But that is at the option of the lender. It's not at the option of the buyer. So it's the lender can, if they want, hold off. But really, once they've got the writ of possession, and that's the suing part, then they lock the place up. And then it's horrible to try and sell it, because every time, if you want to show it to somebody, you've got to have the property manager there charging through the roof, right? If they do let you show it, the buyer wants to send an appraiser in, property manager. So it's very difficult, and they don't have to let you in. So the moral of the story is, don't be an ostrich, but that's what people are. You need to encourage your clients to be proactive. The worst one I had was this guy. I kind of knew him, and he was brilliant. So he hadn't made a mortgage payment in over a year. And somehow or another, it was Bank of Montreal. He screwed them around, and they just gave him time and gave him time, gave him time. Then he phones me, and he has to come in with his wife, like right then. So anyway, I said, okay. So he says, can I speak to you? So he hands me this thing. It was a writ of possession. He hadn't told his wife there was a problem. So I had to tell the wife that they were out the door. So that's the worst sort of procrastination, but it's better to try and hit these things head on. It's better to try to do it so your guy's in control of the sale rather than the mortgage company. And often the clients won't give you all the documents. They'll be slow. I mean, sometimes the reason they're in this position is because they how should I put it? They procrastinate. It's like a character thing that if you put your head in the sand, it'll go away. So yeah. And that's sometimes where, if you're suspicious, we can look at the title and see, and we can check for judgments, that sort of thing. If you're suspicious that they're going down the tubes, and because they're not forthright, they won't tell you. The ones that are actually on the ball will have it sold before it gets to that.
Isn't that what a mortgage verification form is, and you send it to the bank?
Hardly anybody ever does.
No,
that.
you're right.
Yeah.
Although it's attached to every listing that leaves the office.
They don't do it.
99% of them
Yeah.
are not filled.
Yeah, no, it's a good idea to do it. But there are some private lenders probably won't do it.
Right.
Yeah.
Would
Yeah.
the lender have control of how much the house sells? Well, say you bought it for 1.2 and today it's worth 900, prior 1.1, and I'm going 5x sale. Do you have control of how much I'm selling it for?
If they're going to take a loss,
Yeah.
yes. Because if they're going to have to take a loss, you're going to have to go to the lender and say, hey, this is what we can get for it. Are you okay to close and pay my commission? Right? So they are in control to some extent. Yes. Yeah.
Does your firm also practice family law and
No.
estates and,
Well, yeah, we do some wills and estates,
right?
but no, we send the family law out.
You brought up that business with the wife, whatever, you had to break the news. I thought maybe you're handling the divorce.
No, they didn't get divorced till after she knew they lost the house. But it wasn't good for the marriage. Yeah. Yeah, but it was, yeah. So people, and I mean, I think we're coming into this phase of the market where you're gonna have to deal with this. So when you hit problems, you're welcome to call. But it's Claire and I have been around a couple of years, and we both remember
100 years.
we both remember 1990. And in 1990, we kept doing these things called shortfall sales because people were selling houses and they didn't have the equity to pay out the lenders.
Oh, I'm sure Ivan all over again.
So what, like, we don't. So Claire,
And it actually wasn't that bad. When you think about it, it wasn't that bad. Everybody thought it was the end of the world. It wasn't the end of the world.
wasn't the end of the
We just
world.
dealt with it, and you had to know how to negotiate.
You mean the
Yeah.
end of the world is coming now?
No, it wasn't back then. It certainly won't be now. Yeah,
No, you have a couple tricks. So if you're selling a house, you have mortgage that house. There's all kinds of tricks we did in the nineties there with the borders and stuff. Basically, you negotiate.
yeah, all the time.
But as far as you're concerned, you make sure you got your 5% deposit, so you know that you're gonna get paid number one, and we're number one on the list, so we participate or we don't, and then let the other guys fill with the money. That's how we do.
Yeah, so theoretically, the bank could insist that the money goes back into the lawyer's trust account. Typically, they're too lazy. So you try and get a big deposit. Yeah, because if it's there and it's a sitting duck, because usually these things go till the day of closing, everybody's playing Russian roulette, right? And then, so if they have to go to the trouble of getting the money pulled out of your trust account, they likely won't.
But the big thing you need to do with this mortgage verification, we put in our package, so everybody here has mortgage verification. Mortgage verification, for those that don't know, you go to the mortgage lender, you say, how much is it gonna cost my client to get rid of this mortgage? You need to know that number, because sometimes they're in fixed mortgages, so it's just not 3 months interest, or it's just not the interest differential, it's the whole term of the interest. So you need
Yeah.
to know that, so you need to know that number, and it's an arbitrary number. That's when you go to negotiate, you say, well, discharge penalty is this, well, that's just something you guys picked out of the hat, that's what we negotiate.
Yeah, because that's found money.
It's just a
Yeah.
calculation, that's all that's.
And there are some private lenders and also some home trust mortgages and some others where it says it's not open. Like, you can't pay it off. And what that means is it says they're gonna ask for interest till the end of the term. So that
Does
stuff.
everybody follow that? So on these private lenders, even these guys are getting these private mortgages for 8, 10, 12% what they're doing. It's fixed, there's no repayment penalties, no prepayment penalties, it goes to the end. So if you prepay them, they still want their full 5 years of interest. So these guys are sharks, right?
Yeah, so these doing shortfall sales, it's a lot of emotional pressure on you guys. Because they'll be calling all times of day and night, and it's tough. But I guess somebody's got to do it. But it's not an easy way to make money doing the shortfall sales. It's
So we've got food here now, so we're sort of doing the presentation's over, but we're sort of doing ad hoc questions right now, which is perfectly fine, but let's do it while we have the pizza and still kind of warm, and we can sort of deal with this around a little bit more.
Yeah, I'll stay around, sure. Yeah.
So let's get some pizza, whatever else, and come back and sort of just start talking sort of casual, and we sort of go like that, right?
Yeah.
So we can play, don't have to touch
Everyone's
twice. huh?
Yeah, I'm gonna turn off the live. Good to see everybody.